Hello. Today we're going to be talking about the monthly bottoming tail at support trading strategy. This is not a day trade or a swing trade kind of trading strategy, but more for those who like position trading, where you enter the stock and maybe exit in 2 to 3 months time, sometimes maybe even longer. Now, the beauty of this trading strategy is that it allows you to enter once and then you can go on holidays and not worry so much about it. Or if you have a day job, it's going to be a great trading strategy. Now, there are two requirements for this trading strategy. Number one, there should be a monthly bottoming tail. What is a bottoming tail? Later we'll go into it. And secondly, there must be a price support. Okay, if you are a very seasoned trader, seasoned technical analyst, you will be able to understand this entire graph just by looking at it. Okay, let's deal with the bottoming tail first. Bottoming tail, there is a small body and a long tail. Okay, that's why we say this is a bottoming tail. There are two types of it and many small other variations. The number one type is the green bottoming tail. Green means the stock open here during the course of the trading session. It dropped all the way down, but by the end of the session it recovered all the losses and close at the highs here. This small body is the open and close. Now sometimes you might see a red candle, which means that the stock open here, went all the way down and then recover the losses and close higher here. So the open is higher than close in the red one, while the green candle, the open is lower than the close. But when you see either this or somewhere in between the variations where there is a small wick up here, it doesn't matter. What is important is there is a long bottoming tail that tells us that sell off, but the stock quickly recovered all the losses or most of the losses, and this is actually bullish setup. Okay, so for example, in this monthly stock chart of Dayang, there is a bottoming tail here. You can see that it's a bit different than this and this because it's a really small little body here with a small little wick up, but a long wick is what characterizes the bottoming tail. Okay, and then the second thing is there must be price support. Notice how this stock went up and then went down and traded sideways, but this was a resistance area about $1.50 here that it has not been able to go up. Okay, for 2 times it has not been able to break above this 150 area, but the third time it went up and penetrated and went above this resistance area. And in technical analysis, when an old high or resistance is overcome, it becomes a new support. Okay, so the stock declines and forms a bottoming tail, and this area is a support area. So what you are going to do is, when you see a bottoming tail form in the monthly charts, okay, you will wait for the next candle. If it trades above the highs of the bottoming tail, either this or this, you buy it. You buy it here, and then you put a stop loss below the lows of the bottoming tail, and then you can ride it higher for 2 or 3 bars. Maybe it can go even higher. Okay, there are of course many other technical analyses that support the trade. For example, here's a bullish cross, here's a bullish cross, and after that the stock shot up. Okay, we are still in the second month after the bottoming tail. Probably it might continue to go higher, we don't know. Okay, now this is a monthly chart, and it's a rather long trading strategy where you don't enter and exit by 1 week or so, but it affords you the peace of mind where you can make money slowly without all the stresses of looking at stock every day. Now, it's always a good idea to look at a smaller time frame. From monthly, we go to weekly. This is exactly the same stock, but in a weekly chart. So this is the previous high. The stock went up and drops to the area of support here. Previous high is a support. This is a support area. And then a green candle formed and told us that bearish momentum has slowed down. And this also is a correction to a rising weekly MA. So you have two technical supports for the stock, which is why the stock went up. Sometimes you can also use a measured move to get a initial target. A measured move is when the lows here to the highs here, you take the height of it and you project it from the swing low here to upwards. And at this moment, the measured move for the initial target, right, has been met. So some traders might want to take some positions off while riding the others higher. Next, we're going to look at the daily chart. This is a daily chart of the same stock. You can see there's this consolidation here. All right, this consolidation here is in the weekly chart here. Okay, so when it declined, it formed a cup with handle pattern. Sometimes you'll be able to see a lot more when you go into a smaller time frame. Okay, and of course there are many daily setups in the chart as well, but this huge consolidation support will become a very good support for the stock. And because it's a cup and handle pattern, it kind of makes the situation more bullish. Okay, so at this moment the stock is above the rising 20 MA, and there's a recent short-term support, and that's why even though the bullish measured move target is met, we should continue to remain bullish on the stock as long as it's above this short-term support in the rising 20 MA. Okay, so I hope this has helped you and opened your eyes to many ways to make money in the stock market. If you find this trading strategy helpful, this lesson helpful, please like the video and subscribe to my channel for more trading strategies in the future. And I'll see you in the next one.